Two. What the hell? What the hell was that? What the hell? What's that? Okay. Hi guys, so today I'll be showing you how to move from this type of screen to this type of screen. So now, let's get started. So, the first thing when you want to do that, okay, now it's complex, better. And then let's give it a few seconds to open up. Verification. Prove that you are a human. Okay, I don't know what a bicycle is, but I'm just gonna prove that I'm a human anyway. Okay, I think that's it. Oh, look, I didn't fail the test. I'm not a robot. Okay, so let's log in. Save password. I don't wanna keep on remembering the password, so I'll just save the password. And then now sign in with Google. Easy peasy. Okay, verify. Oh, I need to verify first of all my email. So I'll go to my email. I'll go to my mails in just a moment. So what we are basically trying to do here is I want to move from this. You see, this is simple, like nothing done on it, totally nothing. So now I want to move from this page to show you how to create this page. So to create this page, first of all, let's go back and finish the verification. In just a few moments, I'll be done with the verification. Don't worry, outside it's raining. That's why you can hear that much noise. It's actually taking longer than I thought. It's loading too much. I think due to weak internet connection, I need to get Starlink. Okay, inbox. So at my inbox, ooh, there's so many things here. So many things on my inbox. Okay, so let's see. I don't know whether it's in junk mail. Oops, it's not even there. Okay. Oh no. Can't really find it easily right here. But what I can do, I can go to, let's see. I don't really use Outlook for mail, so I'm really struggling to hover through it to get what I want. So just give me some little more time. It can't be it definitely cannot be let's see here. Oh, that's an ad. Jeez. I hate ads in mails. I hate ads in mails. Inbox. Oh, this becoming so difficult. Okay, so I'll just post the video there and then check it on my phone, then come back and show you how we proceed with the next steps. So what you need to do is after signing up, you need to do verification of your email. So go to your mails and then look at the message from you look at the mail from TradingView and then you verify that you are the owner of the account. So in just a moment. And now starting, I went onto my phone, checked on Gmail. Gmail, where is it? It should be somewhere around this place. Should be somewhere around this place. Yeah, here it is. And then waited for it to open, reloaded it. Okay, I don't see any new mail, but let me go to spam. It might be in spam. Or maybe important. Let's start with that part. Important is not in important mails. So let me go to spam. Oops, it's not even there. So I'll move on to all mail, reload once again, then go back to this page. Okay, this page. Just a moment. Okay. Ooh. Okay, it did log in from the PC. So I'll just press agree to everything and then go to next. And then after doing that, yeah. Now here comes the mail. Here comes the mail now. So welcome to the trading view, wherever. Visit chat. Was this email helpful? Wait, let me just give it that emoji. Oh, I don't want to. I don't want to. I didn't want to do that really. So I'll subscribe from those messages. Go to website. That's taking long, but what we'll now do, I'll now move to products and then super chats. Okay, so I'll log into two accounts. Okay, I'll log in on two tabs to show you the different parts. Have failed. Why not? Why did it fail? Okay. Why did it fail? Finish creating. Oh, I've already created the account right here. So now I cannot do it again here. That's why here it's failing. So maybe what I might have done here, maybe go back and now sign in instead of signing up on that. So as that one loads, I'll come back here. Now you can see the chart. This is the chart that we have right now, but now we want to make it to look like this with all these tabs and everything lined up well, keeping us ready for our trading. So let me end this recording on the phone in just a moment, and there we go. Lights, camera, action. Okay, so going on, what we want to do, the first step, will first of all choose a symbol. So here you can look at the currency pair that you want to trade. So randomly it brings up this one on your first login. Therefore, we want to change it to, let's change it to British pound versus US dollar. So GBP stands for Great British Pound. GBP. Okay, GBP USD. So let's take this one. Okay, let's use this one from Rwanda. So now, having placed our currency there, now we can now move on to look. Now we can move on and look at all other stuff that we need to know. So what I'll do, I'll just replicate everything on this site, on my site. I'll replicate it here. So first of all, let's go to here. You have a watch list to the left side. This right to the right side of your tabs of your page. So let's go here to the watch list and then clear list. You tap there. Okay, you can do this. You can come and delete them one by one, but the easiest way is come here at the watch list and then clear list, just like that. Wait, you come here, then clear list. Okay. Cool. It's looks. Oh yeah. This confirmation. Do you want to really? Yeah, I do. And like that, now we can choose what we want to see on our watch list. So looking at this other page, so on our watch list, we have Great British Pound versus, okay, this Great British Pound versus Australian dollar. This is British Pound, Japanese yen. Oh, this was Canadian dollar, Japanese yen, and then Japanese yen, US dollar. Let's replicate those ones. So on our watch list, so we add them at this point. This symbol here, we use this symbol to add them. So I'll search GBP. So Great British Pound and the US dollar, add that one to the watch list, and Japanese yen, add it to the watch list. uh, I had added Great British Pound and the US dollar. Okay, and then Great British Pound, Japanese yen. Oops, there's something not happening well here. GBP, Japanese yen, GBP, Japanese yen. So I'll remove this one. Seems like I have two of them. Great British Pound, US dollar, correct. Not really. Great British Pound, US dollar, correct from Rwanda. Great British Pound, Japanese yen, correct, great from Rwanda. Great British Pound, US dollar. So I'll remove this one from FXCM because I already have this one from Rwanda. So I'll remove that. And then now having added two, the Great British Pound and Japanese yen and Great British Pound and US dollar, let's come on and look at other stuff that other pairs that we can add. Canadian dollar, and then Japanese yen, US dollar, GBP card from Rwanda, add it, and then JPY US dollar from Rwanda, JPY USD. Let's look at one from Rwanda. Okay, there's none from Rwanda, so we'll just go with this one from ICE. Okay, let's go with the first one. So now, like that, we've organized our watch list. You can add more items to your watch list based on the currency pairs that you want to trade. And then now let's go to the next part. So up here on the top panel, you have all these parts. So this one here is the search for the currency pair that you want to trade. You can search the currency pair manually, like let's say JPY USD. And then on your chart now, you'll be reading the Japanese yen versus US dollar charts. And then here, this is when you want to add a symbol. You use this part, this second item on your, this is the top right. Yeah, at the top right of your tabs, you have this compare or add symbol. You can add, let's say we wanna compare with, JPY, JPY, Canadian dollar. Let's give it some little time. It might take time, but we have to be. So rain decided to enter my house. It started raining very very heavily, so I had to pause right there. But actually what I did, I just took the JPY and card and then added them to favorites. Let's continue in just a moment. Boom. So now we are here. uh, let's start. Oh shit, let's continue. Shoot. So this is where we were. Yeah, we are on this page. So just to look at what we had been doing previously. Let me see. Yeah, the recording is already on. So what we had been doing previously, we were comparing some certain currencies and adding others. So I was to add a card JPY. Let's see how that one goes. In just a moment it will be loading, and then boom. Yeah, just like that. it's added. So as you can see on the chart, we have the previous one, the our previous currency pair. We have Japanese yen, US dollar, and then down here we have the one we are doing a comparison on, Canadian dollar versus US dollar. And you can see the symbols right here, so therefore you know what you are always looking at. This one is the JPY USD, the one with candlesticks, and yeah, this one here, JPY USD, and this other one is Canadian dollar, Japanese yen. Now, to the next thing, right here we have what we call, this is what we call time frames. So right now I'm on the 1 day time frame, and basically what 1 day time frame means. Oops, should look if really it's recording well. Sorry. Let's start. Oh shit. Let's continue. Ooh, so sorry for that. I just had to confirm to ensure that it was perfectly recording and I will not do this over again. So to continue, just as I've said, we are in the 1 day time frame, and in the 1 day time frame, each and every candlestick right here shows the price movement in a single day. So this green one here, this green candlestick here, represents a single day price movement. This one represents another single day. So if you look at that, if you take, for example, from this point to this point, okay, I'll get to that. From this point, let me do something here, but I'll get to show you what it is later. Just in a moment. Okay, now from this point, yeah, from that point to this point, that part which I've shaded out, that is like 4 candlesticks, so that is 4 day price movement. And to confirm that, you can see at this point we have been given the date. This is 22nd of July, so this is July, so this is 22nd of July to 26th of July. That is 22nd, 23rd, 24th, 25th, and 26th. That's basically how those time frames are used. And another thing we can look at, right here we have the sell button and the buy button. So whenever you press any of these, you'll either get into a selling position or a buying position. And then this one now is the ATR. It's the and this one right in the middle here now is the spread. Oh, so now this is now how the brokers uh, gain their money. This is now how the brokers earn their money. This is so through the spread, either it's like the price of this header right here, this Samsung header, is 100 shillings. Let's use dollars. It's $99. But now, since I've been given the task to sell it, and I must sell it and get a profit, now I sell it at $100 instead of $99. That way I'm making a profit of 1 shilling from selling this. So now that's exactly what happens here. So when you get into a selling position, the price reduces by this margin, let's say 0.1. It reduces by 0.1, and when you are buying, it increases by 0.1. That's how the brokers gain their money, make their money, I mean. So now moving on to this part, we have the candlestick pattern. So here you can either choose whether you want to show you a candlestick, each price movement by the bars, candles, hollow candles. Well, most people use candles. I also use candles, or whether you want to show it with lines. Let me just show you how that one will look like. You see now that one is when you show it with lines. And when you click things like line with markers, that's what happens. You can test different types. This is hollow candles. Oops, yeah, this is hollow candles. Let me just increase it for you so that you can see it perfectly. In just a moment, I'll be showing you. Okay, I cannot increase the size. Oh, it's the I did not escape. I did not escape that marker which I was previously using. So to show you something we can do, when you look at these tabs up here, there is this one. This is the undo command. You can use that one, or maybe in your Windows PC you can do Control Z, or maybe on a Mac you can do Command Z. So when I do Command Z, I mean Control Z, I use a Windows PC. So I can remove them like that. I can remove everything I did, and by pressing this other button here, Control Y, I can return them once again. But now I just want to remove them, so let me remove them. And then what I'm gonna do next, I'm gonna test for you. I'm gonna show you how. Okay, this one here right now are just candles. Each one is colored, and if I use that one, some will be hollow. The green candles will be hollow, and then red candles, which will be showing when price movement was going downwards, they will be red. Let me return it to the other candles. As we were doing before, we were just trying to replicate this configuration. We are trying to replicate this configuration, and this one here uses, oh, it uses hollow candles. So let me just change it to two candles so that we move in a uniform manner. So after doing that, you can come to this point. This one here, you by looking at this one, this is the alert tab. You can use this to make alerts. For example, when price reaches a certain point, you get an alert, you get a notification, and this alert you can give them sounds, or maybe, yeah, or maybe you just leave them as silent notifications. Moving on to the indicators. So there are different types of indicators. These ones will cover in another video. I've not yet prepared well for them, but I'll go through them and then we'll cover them in another video. Indicators that I've known so far are RSI indicators. There are other indicators like, oh, there's one that I went through today. It was called VWAP indicator, volume weighted average price indicator. And there are other indicators like moving averages and others. Yeah, accumulation, distribution, and Fibonacci retracement tools. There are those ones. So, and then now this part here, replay. This one allows you to go to a certain point in your chart like this, and then when you press replay, it deletes all the bars to the right side. So like for example, if I did that, if I pressed replay, it would delete all the bars on the right side from, let's say, this point. So all the bars towards this other side. Before I show you something, let me just get something here. Just a moment. Let me show you. Okay, it's not there. It's somewhere here. Not really. Yeah, somewhere here. So let's say now price, you wanna replay from this point. So now let's say from that point, prices from this point to that other side will all be deleted, and then it will replay one by one, candle by candle, until at the speed at which you want, so that you can backtest. And well, backtesting is whereby now you take your strategies and then you try them on a replaying chart, so that you see if your trades would have been successful, and by that you can also enhance your discipline, yeah, and follow your strategy perfectly and make corrections on your strategy instead of risking your account. Okay, so after doing that, I'll just press Ctrl Z and then go on to the next thing. So right here we have this tab, layout setup. So this layout that we have here, we can come on, and if we want to make it in different ways, like let's say you want two charts to appear. For this one here, you want a chart or for one currency to appear this side and another to appear on the right side. You'll tap on that. Let's see if it will work. Since I've not upgraded, definitely it did not. So after upgrading your plan, you can use that. And this replay command also, it's only available for subscribers only. So we can then change the name of our setup, manage layouts, and then come. So when you want to change the name of our setup, by default it's called unnamed. So let's change it to, let's rename it to, okay, I'll use the other one that I constructed on this. So I named it my first layout LT. I just come and name this one the same way, my first LT. That way I'm done with that part. Yeah, and now it's updated. And then immediately after doing that, I can now come here, quick search. You can search for anything by pressing on quick search. You can search for basically anything. You can search for figures and other drawings on the chart, anything. So I won't do that. So chart settings. So now let's come to chart settings, and then I'll do this chart settings exactly the same as the other one that we are trying to replicate right now, this one. So I'll go to this part and press on chart settings and then come back. Okay, then come back here. So now if you look, we can set our candles the way we want them to appear. So the body of the candle, we can either make them, so right now we have candles which are red and blue. Blue for the buying one, for the bullish candles, and then red for the bearish candles. So we can change that color to black and white. So let me change it. Let me change the blue candles, the buy candles, to, let me change them to black. Okay, let me change them to blue. And then the red candles, let me change them to orange. Okay, that doesn't look much perfect, so let me change it to pink. Yeah, that's a little better. So you can do that with lots of stuff. You can change this one to black, the borders, these ones too. You can just mess around with them, and then the wicks too, you can mess around with them. Let me make it that way. Yeah, that's changed color. So this side, if you change for this side you'll be changing for the bullish candles, and then this other side for the bearish candles. Okay, if you don't understand that, what I'm literally saying is, this one is for the buy candles, the candles that are for longing positions, the candles that are going upwards, yeah, in other words. And these ones are for candles that are showing price that is going down, or you can also say candles that are for shorting positions or selling positions. This other side. And then on the same, you can then come here and change your time zone. So personally, I'm in Kenya, Nairobi. So I'll look for Nairobi. Nairobi is UTC plus 3 hours. So UTC plus three, and yep, here I have Nairobi. There are other estates and places you can change to, other cities you can change to. You just look at yours. So for example, I'm not technically in Nairobi. I'm in a place called Nyeri, but Nairobi is the nearest city, and the time frame, the timeline, the time frame. Okay, the time here and in Nairobi, because it's in one country, the time is generally the same. So therefore, only Nairobi is available from my place. So I choose Nairobi. I think people from the states, there are so many which you can choose. Maybe you are in Washington DC, or many other. Okay, I don't know many. I don't know many places in the state, but I know many places in Kenya. I'm a loyal citizen, a Kenyan. Okay, and then precision. Definitely, I didn't change this because I just leave it to default, because changing it can complicate lots of stuff. So I don't want to get into that. So let's look at status line. So I'll just show you a few things here. So here, status line. Look what happens right here. Look at what happens right here when I do this logo, and when I return it. Look at what happens. So what happens is these flags, the Japanese flag and the US flag, which are showing the currency pairs, just disappear when I remove the logo. And look what happens when I remove the logo and the title. They all go away. Look what happens when I remove the logo and when I remove the title and the logo remains. It still disappears. Okay, you can choose not to have both of them, because actually right here on the search tab here, we already have our price. So now you can know what price you are trading, JPY USD. So therefore we don't need these ones, so I'll just remove them. And then description we also will not need it. Yeah, we also will not need it. Then open market status, I don't really interfere with that so much. So I'll just exit this part now. I'll exit that part. So now, having explained everything up to this point, I now expect that you've quite understood lots of stuff that I've gone through, and I hope all that you can try and follow through up to where we have reached. So to continue, I'll show you a few other stuff. So you can decide to go full screen mode at this point, or you can press Shift F and then go full screen mode, or escape once again, just like that. It's easy. In a moment, I don't know what's happening here. Oh, there's a countdown for my video. It will be going down in 20 seconds. So let me give it time and then we'll continue later. We'll start another publish. In the meantime, who wants a sweet? Do you know what this sweet is called? Zumba. Zumba. So I really don't know what that means, but Swiss in Kenya, coconut candy. Zumba. So what's? Oh yeah. So just a sweet gadget. Forgive me for that. Let me try again to start another one. Ooh, still failing. That's why to get a sweet, just hit the subscribe button, or maybe you can like, comment on the post, and hit the notification bell, and I'll give you your own sweet. Alright, let's forget about that. So what you are going through here, Okay, we were changing candlestick patterns. Internet error. Just ignore that. So we were changing these candlestick patterns, and we had done all that. So I was just to show you how you record a video and publish. I've noticed that these videos are taking so much long time, and therefore I'll need to be a bit fast. I'll need to be a bit faster in explaining so that you don't get bored watching a 2 hour long video of just introduction to TradingView. So moving on. So right here you can take a snapshot of your screenshot the way it is and then share it with the community so that you can, if you have a question to ask, so you can just do this, download the image, and then boom, it takes a snapshot, and you can therefore save it wherever you want to. But since I don't want to do that, I'll just cancel it. Going on, you can then come here, right where it's written publish. You can upload your video or maybe start a recording. So come here, tap on start a recording, and then don't show again. That is if you don't want to keep on reading this message each and every time. Then continue publishing, and then it will ask you, what do you want to share? Is it a certain tab or a window or an entire screen? So personally I do use entire screen so that I can show both this side and the other side. I can show the entire screen. I can switch between windows and tabs without any much of a problem. So I'll just cancel that. So after choosing, you need to tap on share to start recording, but I won't do that because I just don't want to start another recording. Already I'm having this one here, this one going on right here. So I'll just cancel this, and then after doing that, you can come here. This is whereby we use this to add symbols on our watch list. This one here, advanced view, I don't use that actually, because well, that's for advanced traders, and yet, oh, advanced okay, it happens to be the advanced view, which I thought that it is for advanced traders. It's just something, okay, like your watch list now appears on a bigger screen, nothing much. Oh, if you think there's something much of it, you can just share it down in the comment section. Now, moving on to this part. So this one here is alerts. We don't need to repeat it. We had it here. This one here, data window. So this one here, it will show you how a candlestick is moving. For example, if we come to this one here, we can see where it opened, it's high, it's low, and where it's about to close on. And then we look at, there is that entire change between the open, okay, between the high and the low. And then when we go down, we can see also the volume. Currently I can see the volume, and then here you can show your ideas or maybe get ideas from other people. You can share your ideas. For example, if I start publishing, sorry for that. Okay. Publish a new article. I can write anything about what I think about all those stuff and then share. Let me just do that and then continue. Please provide a meaningful, detailed description of your analysis and prediction. Okay, so I can't do that. I've not subscribed. Even if I do it, it won't go. But if you've subscribed, you can then do that. 30-day free trial. You can do that at your own free will. Okay, so I want to leave. Okay, here you can see messages from other users of TradingView, what they predict, and other discussions that they are having. This one here is just another one like the idea part, and then this one here is your notifications. This one and this one, I don't really use them. Screeners, I don't know what they are yet. Calendar is just a calendar. It never changes. It's just a calendar. It never does change. So let's move on to this other side of the market now. this other side. So coming on to this one, if you go to the left tabs, oh, now it's the time calendars are opening. My internet is weak, forgive me for that, but I think I need Starlink. I'll get it someday anyway. You just need to subscribe there so that YouTube can boost us to get a Starlink, to record better videos and learn through faster internet. Just hit the subscribe button, share the video for encouragement. Thank you. I hope you've done that. So right here, I hope you are focusing on the cursor, not me. Focus on the cursor. So right here, you can either choose how you want your pointer to appear on the screen. It can either appear as a cross like that, or maybe you want it to appear as a dot like that, you see, like a dot, or you want it to appear as an arrow like that arrow, or any other eraser, magic. Let's try this magic. Let's see what it looks like. Boom. Looks awesome. Oh my goodness, look at that. Boom. Looks like, I should try it on the dark screen. Let's see. Okay, we come here. Oops. Unfortunately, if you download the app, it's not there. Unfortunately. But if you're on the website, you can use it. You can use it on the website. So I guess much more times I'll be using the website just to get it like magic. It looks like a magic wand and it does exactly what it looks like. So I'll return it to cross as we wanted it to be. And then right here, you have other tools that you can use. You can have trend lines, ray, info line, extended line, and many other stuff, parallel channel. So let me show you something. So now, there are things that you may want to use frequently, but you don't want to go each and every time and look them up there. So therefore, you decide to place them as your favorites. When you place them as your favorites, they'll come right here and they'll be appearing on screen where they are really accessible very fast. I'll just show you on this one. This is now our favorites tab. This one here. This one that I'm moving around. This one that I'm playing with. That one. So I'll come here and now I'll add every single thing that I need on that. I'll take arrows and then you see this star right here, you tap on that, it becomes a favorite. That's where it goes. And then now this one, let me make a horizontal line and vertical line favorite. Parallel channels, we'll use parallel channels to do analysis of strategies like flags. Yeah, and then we can use them to see if something is a wedge or whether it's a what, ascending. Okay, we can use it to see if something is a wedge or it's just an ascending column. Okay, moving on to this other part. So those are the ones that I'll start at that point, and then these ones here, we have Fibonacci retracement tools. Okay, that's not really for beginners, but we can just add it to favorites. We may need it because very soon we're gonna learn how to use them. And then now let's come to this other part. This one, the third one, ABCD pattern. Well, I don't think these are much more advanced. We'll learn that one with time. If you want, you can go watch other videos on the same ABCD pattern, triangle pattern, but we don't really need them right now. Right now, we need stuffs like this on the fourth, 1, 2, 3, 4, 5. On the fifth row. On the fifth row, we can go mark long position as our favorite because we'll be using it many times. Short position as our favorite. And then any other things we need at that point, we'll need to date and price range. We'll also put it to our favorites. And then after doing that, I'll then come here to geometric shapes and then add path to my favorites and add rectangle to my favorites. And then text, I'll also add text to my favorites. And I'll not add pin, I'll not add flag mark, tweet, image, idea. No, I'll just add that. And then there's this part that tells you measure. So measure, this one you can use it to measure, to know how many bars exist in a certain point. At a certain point, you can do this. Okay, sorry for that. Yeah, just like that, you see, I can see that up to this point we have, from the part that I've marked, from this point to this point, we have 89 bars, and up to this point we have 150 bars, and going on onwards up to 153. So what you notice is that this other side doesn't have anything, but yet the number of bars have increased. Well, this, it also measures the space which could have been occupied by the bars if the price would have moved up to that point. So up to this point is 159, and well, if we move it, oops, okay, we'll do that another time. Or you can just replay the video and see that part. Yeah, you can click a few 30 seconds back behind and see that point. And then zoom, or well, let's just do it anyway. It's not much of a thing. We can just measure like that. Listen, wait a moment. We can measure like that. If you see, if we move it upwards, it shows blue. That's like a price increasing in value. That's a buying, or maybe, yeah, that's a buying position. And if we move it downwards, it shows us a selling position, a shorting position. Upwards buying is also called a longing position. You might want to know that because it's used many times. If you watch videos out there, you'll hear such statements, and when you hear such statements, you want to know such information. Then here we have magnets. I don't really use magnets, but well, we'll learn how to use them when we are going through the strategies. So right here, I'll just show you a certain trick here. Okay, I forgot something. There's these icons, emojis. When you chat, you use emojis and all that. So you can come. I like this other emoji. This one here that looks like a rocket. Yeah. Where is it? Okay, so I can place it right there. Yeah, just like that. Then increase its size and then change its orientation and then move it like that. And then let me see if I can change its color. Ooh, color not possible to change. Okay, so I can make different marks. Let me use this rectangle too. Let me just show you different things that you can do. Write a text, and on this text I wanna write a text. Oops, not really what I wanted to do. So now write, let's say something of the sort, and when I come here I can change its color to yellow. Okay, that's not impressive. Let me change it to that one. No good. Or maybe I can just leave it at that one and then change its font, change the size to that. So after doing all that, you see my graph right here is very messy, but don't you worry. All that we can just change it or remove it all with just a press of a simple button. This one right here. I press that, everything goes like poof. I hide everything. This button right here, this one that looks like an eye, like a eye. You press it again, everything appears. Pure magic. You press it, everything goes away. So after doing all that, what I wanna do again, now that we've finished all these tabs, I wanna add favorite time frames on this bar up here. So I'll come here and then look at each. So these shorter time frames are mostly available for subscribers. For if you've upgraded and subscribed maybe a year subscription, you'll get these shorter time frames. But now for us who have not yet subscribed, we can use the 1 minute time frame, 5 minutes time frame. So I'll just add them to favorites. I'll add the 1 minute time frame, 5 minute time frame. Those are mostly used. 15 minutes. Some also use 30 minutes, but I won't add that. 1 hour time frame, 4 hour time frame, 1 day time frame, and I'll end it at that point. So now you see they are all added up here. 1 minute, 5 minutes, 15, 1 hour, 4 hours, a day, a week. Yeah, that's the number of time frames that we've added, and that's just enough. We don't need any more. Okay. So now having done all that, we can now move our favorites bar down here, down there, and then add custom interval. Okay, you can add a custom interval, but that will only work if you have subscribed. So if you're a free user like me, you not enjoy that. Any other thing we need to do? So right here, we can set these ones here. We can set these price movements. So we come here to set at settings. We come at settings. Let's wait for it to load. Let me see how long we have for our video to end. About 3 minutes. Oops. So I'll make it regular. Yeah, mostly they appear like this. Regular. And then another thing I wanna do, more settings. Now I wanna change this layout to be dark. I change it to be dark. Symbols, all that. Not there. Not really here. Let me look for it in these other settings. Logo title. Everything background. Let me see. Background. Oops, not really what I'm looking for. Ooh. Shh. Dark theme. Yeah. So now let me just withdraw that. So you come to this logo which has your name, and then you choose dark theme. Just like that, you have your dark screen. And ladies and gentlemen, we just transformed to this type of layout. There ain't much difference, almost everything is the same. And now having done that, we can now finish our video. And well, if you wanna watch other more videos explaining many other stuff that I've not covered here, like the next time we'll be trying out strategies. I'll show you how we'll be using the strategy of flags. We'll learn very many types of strategies. There are some strategies that predict price movement in the same direction, while others reversal movements. So they are just called reversal strategies and trend reversal strategies and trend continuation strategies. We'll learn them all next time. Just hit that subscribe button, like and share the video. And if you have anything you want us to cover next time in this video, just kindly comment, and I hope to see you in the next video. Well, goodbye. Oh. Sorry. My name is Arnold, and wagwan. What's up? Bye. This is Kenya. I'm in Kenya. Whatever. Bye. My lord. So for a moment I was gone a little bit, but let's go on. So we were saying that Mary buys one standard lot, a national amount of 100,000 USD of USD JPY at a rate of 79.5, and we've been referred to a figure. This one's figure 1. This is it. So she buys it at this part. So let's go on. So we see she buy at 100,000 USD at 79.50 USD JPY. That converts to 7.95 million JPY. Okay, paid on buy. So let's go back and see if we understand that. So to control that position, Mary needs to post margin from the USD 10,000 of available funds. So we had first seen that Mary had 10,000 in her account. So with 50 to 1 leverage, that's the ratio of which she's leveraging at. Mary need only pledge 2,000 as margin on a 100,000 USD position. So let's see if we can see what that means in calculation. I have not written anything yet, so just a moment. Let me place the camera well. Okay, so leveraging and margins. Yep. So Mary has 10,000 USD and she wants to leverage. She leverages at 50 to 1 ratio for a standard lot. And as before, we had seen that a standard lot is 100,000 units of the base currency, which in our case here is the USD. So 100,000 USD. So she's leveraging at a ratio of 50 to 1. So now let's see how much she needs. So you'll say that if 50 is 1, if 50, this is just basic maths. If 50 is 100,000, how much will she need for one unit? Because that's what she is leveraging at. That's the ratio that she'll be using. So how much will she need to represent this 100,000 units? So she'll need 1 over 50 of that 100,000, which is in our case $2,000. So she'll use $2,000 USD for a position. So she'll use 2,000 USD for a position of 100,000. So with 50 to 1 leverage, Mary need only pledge 2,000 USD as margin on a USD 100,000 position. So she'll use 2,000 as a margin on a 100,000 USD position. So she'll only spend 2,000 of the 10,000 she had to trade with a position of $100,000. I hope that's clear. Moreover, since there is 8,000 US dollars of unplayed funds, she had 10,000 at first, so she has 8,000 more, which is unplayed. Mary has room to take an even larger position if she so desires. Yeah, so now we've understood the part of leveraging and margin. Let's assume Mary is correct. She bought, right? And when you buy, you expect it to go. You expect the base to go up, while here our base is the USD and our quote is the JPY. So she expects the base to go higher and the JPY to go lower. Let's assume Mary is correct, and the USD JPY price moves higher from 79.50 to 80.00. So at 80.00, Mary is content with her gain and she takes her profit by selling an equal 1 standard lot of USD JPY. So she now sells it after being content. She predicted that at 79.50 it would go higher has reached 80.00 and now she's content. So now she sells it and she takes her profit by selling an equal one standard lot. You remember she held a one standard lot position. So now she sells an equal one standard lot at this price 80.00. So now let's look at how leverage helped her. Okay, so this figure one we had gone through this and this figure 2. Now we are going through this is the figure one that we had gone through. Let me just zoom. Yeah, that's figure one and now this is figure 2. Yeah, so now at 100 for the leverage that she had, remember she only used 2,000 for this to hold a position of one lot which was 100,000. Therefore she at 79.50 we can say that she paid 7.95 million Japanese yen, and then at selling that one standard lot position at 80 USD/JPY, she sold it at 8 million. Thereby, if you take that difference, 8 million and 7.95 million, you find that she made a profit of 50,000 JPY. That was her profit. But now this is in Japanese yen. So now, since Mary's FXDD account is in USD, JPY profit needs to be converted into USD at the current USD JPY exchange rate, which in this example for our case it's 80, because now she's selling it at 80. The profit is at 80, right? When she sold it, that's when now we are calculating the profits. So she needs to exchange it back to US dollars from Japanese yen, and therefore her profit from Japanese yen 50,000 would equal, so you take the profit, then you divide by the exchange rate, which in our case is 50,000 Japanese yen divided by 80.00 Japanese USD exchange rate. So by doing that, let me just get my calculator. Yeah, and then now from my calculator, 123 divided by 80, that gives you 625. So profit of, let's write that down. So profit of 123 JPY at sell of 80.00 gives 625 USD profit. Let me just write profit. Yep. So just by that, so I could also write here just for memory, about 79.50 sold 80.00 profit on standard lot would be 50,000 JPY, which is 620. Okay, let me just 625 USD. Yeah, that's quite understood now. So moving on downwards, the return on investment gives a trader an idea of how much they made or lost. So this is the return on investment. Oh, apologies for that. The ROI, return on investment or margin, gives a trader an idea of how much they made or lost a trader in terms of the ROI or margin applied. In our example, we know Mary played 2,000 of margin to her USD trade and made profit of 625 US dollars. To calculate her return on investment, divide the profit by the margin. So her return, okay, so her margin was 2,000 and she got a return which is a profit of $625. So dividing that, the profit by the margin, we'll get that she had a return on investment of 31.25. So let me just write that down. ROI is equal to profit slash margin. So in our case, that is 625 over 2000, which is 31.25%. So we'd say that this 2000 here is the margin. Let me use a different pen. Is the margin. Yep, that way. Moving on to the next thing. Let's see. Calculate her ROI. Divide the profit by the margin. Okay, that's good. Okay, just something else that's important here. Let me just enlarge that and show you this part. So let's keep in mind that if the market was to move against Mary's position, she would have lost funds. For example, if Mary bought one star lot and the price moved 50 points in the opposite direction from 79.5 to 79, she would have lost $632.91. So we can just do simple calculation of that and see if we got it right. So it means that if the markets were to move against her, then with the standard lot at 79.50, a standard lot she would have invested 7.95 million. Okay, 7.95 million JPY. Then if it moved 50 points down in the opposite direction, then that means that she would have sold it at 7.9 million. 1, 2, 3, making a loss of 50. 1, 2, 3, making a loss of 50,000 JPY. So if she made a loss of 50,000 JPY, then her take profit in USD, a take loss, I don't know whether it will be a take loss. So her loss in USD, let's put this to be a negative to make the difference that it's a loss. So this is negative 50,000. So her loss will use the now existing form will now use the now existing position to calculate her loss in USD. So that will be, she'll be selling it at 79.0. So we'll take negative 50,000 divided by 79, and then we'll find that taking that 50, 1, 2, 3 divided by 79.00, we get 632.91. 632.91 USD. She'll had made that loss, 632.91 USD. So that being understood, we can go on to the next bit of it. So having done that, we now have understood leveraging and margins. So let's move to the technical analysis bit. Because the forex market moves so quickly and aggressively, currency pairs are said to be highly trending, with the pairs value often following a pattern of growth or decline. So since it moves aggressively and quickly, it follows some patterns, and they are said to be, and the patterns can be followed and traded. With so many trades going on every day, it's possible to utilize common analytical tools to detect patterns and make predictions. And this is what many people do when they want to do forex for speculation. So technical analysis attempts to predict future price movements by analyzing past price patterns and mathematical indicators. Price charts are the primary platforms used by technical analysts. Price charts. These exchange rates charts show historical price patterns that can be used to help predict possible price events in the future. Some key technical analysis tools and techniques include trends. So there are trends, these are the trends. And then now let's move on to the second bit. The concept of trend refers to a net price movement over time, either to the upside, or to the downside. Currencies tend to trend. Apologies for currencies tend to trend frequently and for fairly prolonged periods of time. Trading with a trend is often advocated because in doing so, the trader is trading with the general net flow of the market. So using this trend, you can predict what happens next. And this is highly encouraged because traders can easily know how the market will go. Support and resistance. Support and resistance represent important characteristics of all financial markets. Support can be considered price floor, while resistance represents a price ceiling. So support, let's see here. Support is this price floor, and resistance is this ceiling. So we at different points we have the support and resistance. Then here we have the breakout. Support and resistance exist because of market memory. Market participants remember certain past price levels or regions where prices stand, and they then act upon these levels in their trading. One can therefore predict enhanced trading activity when prices reach these levels. Support and resistance levels can be used whether traders are trading breakouts of these levels or bounces. So at this point we can see that the market moved in this manner. It had a support at this point and a breakout at this point, and a resistance at this point. So whenever it reached this level, it resisted and moved back down. And then when it hit the support level, it then moved up. So someone can really predict that when at a point a currency is at this point, he or she can predict that when it reaches at this point, she can then buy for it to rise to that certain level. And this helps traders make profits easily. So by knowing where the supports and resistances are, you can know whether to buy or sell. And by knowing that also, you can know whether a currency pair has breaked out of that pattern. Like this point, that's a breakout point. So it has left the trend that was happening here. And moving on to the chart patterns. Chart patterns track price action across time. These patterns can provide key clues as to future potential price movement. So there are different price patterns. Here we can see there's this symmetrical, ascending, descending. Okay, so I see important chart patterns include triangles, flags, pennants, rectangles, wedges, head and shoulders, and double and triple tops and bottoms. Usually a trade entry on a chart pattern is triggered on a breakout of that pattern. It is triggered on a breakout of this pattern. So that's when a trade entry on a chart pattern is triggered. So just to understand this, let me see if, not discussed down below, but generally what I see here is this. You can see these triangle patterns, these types of triangle patterns, that is ascending. So let me just write it down and try showing you. So here we have triangle patterns. So we'll do this. So there's this one that moves like that. Let's say that one. So if we draw a line below it like this, and then we draw another line downward like that, You see, this is symmetric. This side and this side looks almost similar. That's symmetric. Like it forms such a triangle as this. So that one we call symmetrical. Symmetrical. And then let's look at this one. So there's another that moves in this manner. Let's say such a manner. So if you draw a line here and then you draw another line here, you see this one is moving to the top, to top. Let me add here, moving to top. So we can call this one ascending. Anything ascending is anything moving upwards, like Jesus' ascension. Yeah. So then the third pattern, we have this one here. Yep. Let's just move it like that. And then now that one, if you draw a line below and then you draw another from here touching the tops, then you will see that this is moving in this manner downwards. So moving downwards, and that's descending. Yeah. Moving on. And now moving on. By the way, I watched Dylan Page. I'd like to get the aura too. Okay, so moving on. Moving averages. So moving averages are running averages of past price action over a predetermined period of time. These indicators smooth out often choppy price actions and can provide useful indications as to price trends and trend changes. So I think, okay, let's see that. Ask bid. We'll need to do further research on that. These are just highlighted. I guess this book is ending on page 20, and then the rest of the 5 pages are just questions. I think now they're just highlighting, but we'll need to look for another book to go through this part of important chart patterns, flags, pennant, triangles, rectangles, wedges, head and shoulder, and double and triple tops and bottoms. Okay. Moving on. Moving averages are running averages of past price action over a predetermined period of time. These indicators smooth out often choppy price action and can provide useful indications as to price trends and trend changes. So indicators, and okay, here actually I think I can figure out something. So you can see this line, this continuous line, this one here. I think that's the moving averages. So now, like, this guy has made a smooth curve cutting through the prices just to see how the prices move, the averages, how the prices move generally. Yeah, so that's the moving averages. You can use that to know whether when it reaches this point, will it go down or will it continue going up. If you look at it for a longer period of time, you can know where it will be going. So indicators and oscillators. Most of these indicators and oscillators provide indications of possibly overbought and oversold price conditions, as well as trend determination and trading signals. There are many mathematical indicators and oscillators that can be overlaid on a price chart. ADX indicators. So that's one example. ADX indicator. We need another book for that. I'll look for a book and then recommend it for us. Indicators and oscillators, accumulation / distribution volume. Okay. We just need to see what they look like. This like a prerequisite now. And then RSI overbought sold. Oh, this was accumulation / distribution. Then this one is overbought sold. So here we can see this indicator shows the buyer's territory and the seller's territory. So above 50%, above 50, below 50, you can see most people are buying at this point, at around that point. Yeah, and most people sold at these levels. When it passed these marks, then most people sold them. We'll continue looking at that in the next class, in the next video. Fibonacci. Let's see Fibonacci. The Fibonacci sequence is a mathematical construct based on historical mathematical observations that have been adapted to financial market trading. I've had Fibonacci in one of my classes. I do mechanical engineering. So in one of the classes, one of my mathematics classes, I've heard of Fibonacci, and I'll tell you what it is in our next class. So here, Fibonacci trading is based on the golden mean and provides trading ratios that can be used in determining potential target price levels and possible price turning points. Let's increase that, or I'll dedicate one video for Fibonacci, and then we'll understand Fibonacci curves perfectly, then we'll relate it to trading, and then we'll continue with the other videos. I'll sure do that before I'll make sure to do that before when will be that? Before 27th of this month. Today is 26th. Yeah, I'll do that before today is 25th. I'll do that before 27th. I'll dedicate a video for Fibonacci curves, and then we'll relate it to the market trends and how to trade. Yeah, thank you. So let's go on. Moving on. Ignore that. That's just a message. So candlestick patterns. Candlestick patterns are analysis based on the size. Candlestick patterns are analysis based on the size and alignment of price bars. So these ones here are the price bars. So now these are candlesticks are analysis based on price and based on the price and the sizes of the price bars. So these patterns can be effective in highlighting the conflict between bullish buyers and bearish sellers, and therefore can provide clues as to potential impending price movement. Candlestick patterns. There is going long 3 method information. That one. Shorting 3 method going long 3 method formation. Shorting 3 method formation. In this we can see there is this one uncolored, 2 and then 3 colored in between. This one 3 uncolored in between and 1 colored to the sides. We'll look at that. Going long Harami. I don't know whether it's Haramai. Okay, going long Haramai. So this one seems to be going long Haramai and shorting Haramai. Well, we'll see that. And then going long Haramai cross and shorting Haramai cross. Shooting star. And then there's spinning tops, dark cloud cover, high-low sequence, open to close. Okay, that one is not well expounded on this book, so we'll move to another book. I'll look for another book and then suggest to us what we'll be going through with that book. So moving on to the next part, fundamental analysis. Fundamental analysis involves the analysis of influences that may cause a currency pair to move higher or lower. It involves the analysis of influences that may cause a currency pair to move higher or lower. Generally speaking, a currency pair will move higher if the economic influences of the base currency are more positive or a relative basis than the economic influences of the quote or term currency. Oh, now I guess this is whereby you predict the movement of the currency. I've seen people doing that. I've seen it in the media. People predicting the currency movement according to the... Right now we are waiting for the US elections 2027, 2024 I mean. It will be happening in December this year. So many people are trying to predict movement of stocks and prices and commodities and other currencies relative to how the outcome of the election may be. And they also do that with influences of how the campaigns are currently happening. And things like assassination attempts of Donald Trump and other parts or segments of the speeches that he gives during his campaigns are used to track down and try to tell where the market will be going. So fundamental influences. So the fundamental influences, there are many economic factors that may cause an economic bias, which then affects the value of currency pairs, such as GDP, interest rates, inflation, employment, retail sales, trade balance, current account, trade balance or current account, gold prices, commodity prices, even currency values, fiscal policy, central bank policy, and stock prices. All those affect currency levels. So if you want to do fundamental analysis, then you may very much like to know more about these fiscal policies, stock prices, gold prices, commodity prices, even currency values. Pure fundamental traders tend to focus on the longer term trends of economies. Those judgments are typically derived by analyzing the trends of economic data. If the trend suggests economic growth of a nation, this will positively affect its currency. If the trend suggests economic decline, this will negatively affect its currency. Economic data is released on a scheduled basis. So let's move on to the creating a trading plan. I guess this is the last bit of this book, which we'll be discussing here, because the rest is information about the company and maybe quizzes on yourself. We won't be going through this, but later on we'll be looking at another book for things that we may have been highlighted here but not expounded greatly. So the trading plan. Creating a solid trading plan is one of the keys to becoming a successful trader. By detailing all aspects By detailing all aspects of your trading in a comprehensive plan, you can eliminate ambiguity and potentially negative trading behaviors. Yeah, many people fail because of negative trading behaviors. Like for example, you say that I'm buying this at, like now let's look at the example of Mary here. Mary bought at 79.50 and at 80 she was content. So some people, you'll find that at 80 they are not yet content, and thereby they had a target of, let's say, 80.50, but then they wait for the price to move to 80.50. The price moves to that bit, but then they are not yet content. They say, let it then reach 90 and then I'll sell. And then the price goes up and then it starts shooting down. So you'll find that when it starts shooting down, they'll see they are making losses and then maybe cash out or sell at around 73, that thereby making a very, very great loss. So you need to develop your trading plan to ensure that you trade successfully. You don't need to have negative trading behaviors, such as, let's call it, you don't need to have trading hunger, or you don't need to be selfish. And well, you should have good trading behaviors. They call it positive trading behaviors. Since, okay, that's just what I've said, because here it's written negative trading behaviors. A plan for trading is similar to a plan for any other business. Sure. It's essential to ensure that the business owner or trader sticks with a well thought out and tested approach to growing the business while minimizing risk. So we need to get our trading plan, and then it should be well thought and a tested approach. We don't need to be trying out new things. Well, you can try out, but for a beginner, it's easier to follow an already proven approach instead of making your own. You cannot really afford making those losses when you are beginning to trade, when you have limited amount of money. So elements of an effective trading plan should include all of the most important aspects of the trading process. This should include, at the very least, amount of starting capital. So elements of a trading plan: amount of starting capital to be used for trading, primary lot size and leverage used, primary currency pairs traded, maximum percentage of trading capital, risk on each trade. So the maximum you risk on each trade, reward to risk ratio target, realistic daily or weekly and monthly profit goals. So you have to have your profit goals, reward to risk ratio lined out well, maximum percentage of trading capital, risk on each trade, amount of starting capital, you also need to know that, and primary lot size and leverage used. All that you have to keep in mind before you start, to ensure that you have good plan, and well, you keep yourself in line. When you're making lots of losses, you sit down and wait a moment, pause, and re-strategize. Specific daily and weekly, monthly loss limits. So you need to have your profit goals and loss limits, and loss at which a trader stops trading for the given period. So whereby you make some losses and then you decide, no, let's wait and we'll try again, let's re-strategize. Specific trade entry criteria according to the tested trading strategies, specific trade exit criteria, stop losses, profit limits, and or manual exits, according to the tested trading strategy methods for managing open trades, and as part of this plan, they should also keep a date. The traders should also keep a detailed journal of all trades with reasons for entries, exits, so that there is an ongoing assessment of exactly how well the trading plan was followed. So
in this video, we're going to show you everything you need to know about reading candlestick charts fast. Here's exactly what we'll be covering in this video. As always, if you want more videos more often, please hit the like button, as it allows for our team to keep producing videos on YouTube. Now, here's how you actually read a candlestick. Green candlesticks are bullish because price appreciated and went upwards for the time period. Red candlesticks are bearish because price depreciated and went downwards for the time period. This rectangle area is known as the candlestick body, or the real body. These lines that stick out above and below the candlestick body are known as the wicks, or shadows, or tails. For green candlesticks, the opening price is at the bottom of the candlestick body, and then the close price is at the top of the candlestick body. For red candlesticks, the opening price is at the top of the candlestick body, and the closing price is at the bottom of the candlestick body. The wick ends at the top represent the highest price point of the time period. The wick ends at the bottom represent the lowest price point for the time period. Now, what does the size of the candlestick body tell you? The bigger the candlestick body represents momentum gain, as price traveled a greater distance during that time period. The smaller the candlestick body represents momentum loss, as price traveled a shorter distance during that time period. When you have a very small candlestick body or close to no body, this is known as a doji, which represents indecision from buyers and sellers because price swung up and swung down during that time, but then closed close to the same price as where it opened from, which means buyers and sellers got nowhere and again shows indecision. Now, before we show this on the charts, why are candlesticks important to understand? Candlesticks tell a story and are a reflection of what buyers and sellers are doing, meaning the candlestick pattern that forms at that particular moment in time tells you a lot about what is going on in terms of the buying and selling occurring in the market. So traders will look at candlestick patterns and the movement of candlesticks to make trading decisions, which is also known as price action. Now let's go through this right on the charts. This here is the asset you are looking at, and in this case, it is the Apple stock. This here is your time frame. Right now it shows 1D, which translates to the daily time frame, meaning every candlestick you see represents 1 day of time. If we were to switch this to the weekly time frame, it would show 1W, and then every candlestick you see on screen would represent 1 week of time. If we were to switch this to the 1 hour time frame, it would show 1H, and then every candlestick on screen would represent 1 hour of time. This bar below tells you the date and time. So if you take your mouse and place it on top of this candle here, you'll see the dotted lines connecting the candle to the scale below, which shows the date as January 3rd. If you move your mouse one candle to the right, you'll see 1 day later, which is January 4th. Again, because you are on the daily time frame, every candlestick represents 1 day of time. Now this bar to the right tells you the price of the asset. Let's say you want to know the price of this green candle here. Remember, green candlesticks open below at the bottom of the rectangle here and close above at the top of the rectangle here. So if you want to know the opening price, place your mouse at the bottom of the rectangle and notice how the dotted lines connect the candle to the scale on the right, and it shows $126.05, which means when the market opened on January 6th, the Apple stock was trading at $126.05. Now if you want to know the closing price, place your mouse at the top of the rectangle. Look to the scale on the right and notice how it says $129.61, which means when the market closed on January 6th, the Apple stock finished trading at $129.61. This is why green candles are bullish, because price opened at $126.05 and closed at $129.61, meaning the Apple stock appreciated $3.56 on the trading day of January 6th, which is bullish price action because buying interest in the stock drove price upwards. Now the wick below is the lowest price that the Apple stock reached that day. Place your mouse at the bottom of the wick and it shows $124.90 as the day's lowest price. Now the wick above is the highest price that the Apple stock reached that day. Place your mouse at the top of the wick and it shows $130.30 as the day's highest price. So let's say you want to know the price of this red candle here. Remember, red candlesticks open above at the top of the rectangle here and close below at the bottom of the rectangle here. For the opening price of January 3rd, place your mouse at the top of the rectangle and it shows $130.24. For the closing price of January 3rd, place your mouse at the bottom of the rectangle and it shows $125.13. This is why red candlesticks are bearish, because price opened at $130.24 and closed at $125.13, meaning the Apple stock depreciated by $5.11 on January 3rd, which is bearish price action. The wick below is the lowest price that the Apple stock reached that day. Place your mouse at the bottom of the wick and it shows $124.21 as the day's lowest price. The wick above is the highest price that the Apple stock reached that day. Place your mouse at the top of the wick and it shows $130.93 as the day's highest price. So if you want to use the exact same charting platform we are using right now, go to tools.wisetrade.com. Now, when you see more red candles than green candles, this represents a downtrend and bearish price action and a depreciation of the asset, as sellers and bears continue to sell more of the asset, causing the push downwards. When you see more green candles than red candles, this represents an uptrend and bullish price action and an appreciation of the asset, as buyers and bulls continue to buy more of the asset, causing the push upwards. When you see a bunch of green candles together, one after the other, this shows price is gaining more upwards momentum. When you see a bunch of red candles together, one after the other, this shows price is gaining more downwards momentum. When you see a mix of both red and green candles together and sideways price movement, this shows indecision, consolidation, and a choppy market. So before we continue, we want to hear from you. Tell us in the comments below right now what topics we should cover next, as we always look at the comments to decide on next video topics. Also, please hit the like button, as it allows for our team to continue to produce free YouTube videos. So, how do you identify an uptrend? You have your runs here and your pullbacks here, which means an uptrend makes higher highs and higher lows. From a price action standpoint, a moving uptrend shows bullish momentum and that the buyers are in control, so you lean towards taking long entries to trade with the moving upwards herd momentum. So now, how do you identify a trend change from an uptrend to a downtrend? Type 1. You have your moving uptrend through the higher highs and higher lows before a lower low forms, signaling a trend change from an uptrend to a downtrend. Type 2. You have your moving uptrend through the higher highs and higher lows before you have a lower low form, followed by a lower high pullback before the full trend change breakout and lower low. Type 3. You have your uptrend through the higher highs and higher lows before you have a lower high that forms, signaling a trend change from an uptrend to a downtrend. So, how do you identify a downtrend? You have your runs here and your pullbacks here, which means a downtrend makes lower highs and lower lows. From a price action standpoint, a moving downtrend shows bearish momentum and that the sellers are in control, so you lean towards taking short entries to trade with the moving downwards herd momentum. So now, how do you identify a trend change from a downtrend to an uptrend? Type 1. You have your moving downtrend through the lower highs and lower lows before a higher high forms, signaling a trend change from a downtrend to an uptrend. Type 2. You have your moving downtrend through the lower highs and lower lows before you have a higher high form, followed by a higher low pullback before the full trend change breakout and higher high. Type 3. You have your moving downtrend through the lower highs and lower lows before you have a higher low that forms first, followed by a trend change breakout and higher high. So, how do you identify a sideways ranging market? Prices making same highs and same lows and moving in a sideways direction. In markets like this, look to take trades in both directions with confidence. So, how do you identify momentum gain? The first way to identify momentum gain is to look for tight price movement. In an uptrend, notice how prices vary tight together without wide swings, which shows buyers are in full control and that not enough sellers are in the market to cause swings in the opposite direction. You want to trade with this upwards gain of momentum and not against it. In the opposite direction, in a downtrend, notice again how price is very tight together without wide swings, which shows that sellers are in full control and that there are not enough buyers in the market to cause swings in the opposite direction. You want to trade with this downwards gain of momentum and not against it. So the second way to identify momentum gain is candles growing in size. In an uptrend, notice how each candle is getting larger and larger and moving a greater distance per candle, which shows a gain in bullish momentum. You want to trade with this gain of momentum and not against it. And in a downtrend, notice again how each candle is getting larger and larger and moving a greater distance per candle, which shows a gain in bearish momentum. You want to trade with this gain of bearish momentum and not against it. So how do you identify momentum loss? The first way to identify momentum loss is to look for wide swings of price after tight price movement. So this uptrend here is tight price movement, which means the buyers are in full control. You then had wide swings occurring, which shows momentum loss and that the buyers are no longer in complete control and can lead to a possible reversal of price if paired with trend change price action. Going in the opposite direction. This downtrend here is tight price movement, which means the sellers are in full control. You then had wide swings occurring, which shows momentum loss and that the sellers are no longer in complete control and can lead to a possible reversal of price if paired with trend change price action. The second way to identify momentum loss is to look for shrinking candles. In a downtrend, notice how you start with a big red candle, and then every candle after gets smaller and smaller, which shows a loss of downwards momentum as the distance traveled per candle is less and less. This can lead to a possible reversal of price. In an uptrend, notice how you start with a big green candle, and then every candle after gets smaller and smaller, which shows a loss of upwards momentum as the distance traveled per candle is less and less. This can lead to a possible reversal of price. The third way to identify momentum loss is to look for a candle color change after you have consecutive candles of the same color. In a downtrend, notice how you have all red candles before a green candle appears. This shows momentum loss because price failed to produce another candle with a lower low closing price and instead made a higher closing price through the green candle. This can lead to a possible reversal of price. In an uptrend, notice how you have all green candles before a red candle appears. This shows momentum loss because price failed to produce another candle with a higher high closing price and instead made a lower closing price through the red candle. This can lead to a possible reversal of price. Not knowing how to differentiate between a bull market versus a bear market versus a neutral market is why you keep failing. Please hit the like button, but more importantly, hit the notifications bell so that you know exactly when new content is released. Starting with a bull market. In a bull market, you'll see price trending upwards. You lean towards taking long trade setups to trade with the overall upwards market momentum. Short trades in a bull market are riskier as they are short-lived and just corrective pullbacks before the larger uptrend continues. Imagine market momentum like the current of a river. Even if you make mistakes on your trade entry, it might still end up in profit as you're trading with the flow of the true market direction. Now, from a stock market standpoint, a bull market is when prices in a financial market are trending upwards and when there is a 20% rise in a major stock market index. There's an overall positive optimistic market sentiment, which leads to more buying than selling and results in an overall rise and appreciation of assets. Now, let's show how to identify a bull market through price action. The first way to identify a bull market through price action is to identify higher highs and higher lows. Here's your moving uptrend. Notice how each new swing high is higher than the previous swing high. Notice how each swing low is higher than the previous swing low. That means price is making higher highs and higher lows, signaling a bull market and moving uptrend. Knowing this, you lean towards taking pullback long trades at support levels and areas of value within the moving uptrend. Let's show this again. Higher highs and higher lows. Pullback long trades at support. So moving on to the second way to identify a bull market, which is through identifying consolidation patterns followed by a break above the pattern. Impulse move up, any consolidation pattern from this list forms, followed by a break above, which signals the bull market will continue. This is where your long entry point would be, as it shows the consolidation is over and that the next leg of the uptrend and bull market has begun. Or to be more specific, it shows new buyers have stepped in to continue the push upwards, which resulted in the break above the pattern instead of below it. Again, impulse move up, consolidation pattern, break above, showing a continuation of the bull market. Impulse move up, consolidation pattern, break above, showing a continuation of the bull market. So, moving on to the third way to identify a bull market, which is through identifying massive bullish engulfing candles forming often. When you can identify massive bullish engulfing candles forming often that are larger than all other candles around them, this shows there is heavy buying presence in the market and that the bull market is fully intact and will likely continue. The fourth way to identify a bull market is when you can easily place a trend line below the uptrend. These swing low points allow you to place an upward slanted trend line connecting them, showing that this is a clear uptrend and bull market. Long trade opportunities present themselves at the trend line. The fifth way to identify a bull market is when price is clearly above a moving average.
never slow up. No, I don't take shit, I got no love for the fakeness. If you wanna play tough and wanna hate this, I'll always show up. you.